I'm Greg Hunter. Welcome to USAWatchdog.com. I have a lot of people that call me up and ask me about silver and gold. I'm not really a silver and gold site. Particularly, I don't do very much on silver whatsoever. But I do know people that know a lot about that and a lot about the economy. And we have on David Morgan, who is an expert in silver and the economy. David Morgan with the MorganReport.com. David Morgan, thank you for joining us today on USA Watchdog.
Oh, great to be back with you, Greg, and I appreciate the interview.
I know you've kind of rebranded. You've had the Morgan Report for years. I just wanted to get this out of the way at the front. You know, you were silver and hyphen investor for a long time, but you're much more than that. I mean, anybody that does precious metals has to know a lot about the economy because you know, silver or gold or platinum or those metals don't trade in a vacuum. They trade in the economy. So you've rebranded yourself to the MorganReport.com, which I think is a smart move because it is more than just, you do more than silver. But I do want to start with silver, if that's okay with you.
Absolutely. Go ahead.
A lot of folks are wondering why that silver is trading in this really narrow range. I mean, from what I can tell, it doesn't go much below 16 and it doesn't go much above 17. And does this look like a bottoming process, or are we getting ready? Is this on a plateau and ready to go lower, or are we going to go higher? I mean, what do you think's going on here?
Well, as I'm very fond of saying, and being a bit of a disciple of Richard Russell, the granddaddy of all newsletter writers, I try not to tell the market anything, and I try to let the market tell us. So right now we've been, as I said, Greg, in this long, what's called an indecision pattern. Basically, gold is in a 3% bandwidth. It goes up, it gets above 1,200, starts pushing toward maybe 1,250. The gold bugs get excited, and then it falls back in the channel below 1,200, scrapes along 1,180, and it oscillates like a sine wave, almost back and forth and back and forth. Silver has a similar pattern. It's been for 3 or 4 months in both the metals. And the way you analyze that, it's very simple. Whether you like technical work or not, it works most of the time, not every time. Channel formations work very often. So what we need to see gold break through. I forget the exact number I gave to my members. I do these videos with my voice and the charts, and I show them exactly what I'm looking at. It's more of an art than a science, but let's say it's 1225 on gold. It needs to pierce that level to the upside, and it needs to maintain it for 3 days in a row. Normally, those overhead resistance points need to be tested 3 or 4 times. Usually, they hit it, they might even pierce it, and then they come back down. It goes through it again. So it's like sledgehammering a brick. You know, usually it doesn't break on the first hit. You got to hit it, and maybe the 4th time it breaks. Same thing on overhead resistance, or sometimes on downside resistance. So right now, we've got an upper band, a lower band. Whichever way it breaks this next time should tell us. In other words, the market will be telling us very clearly, yes, the bottom's in, we're going higher. Or if it breaks the bottom of the channel, conversely, there will be probably a new low. And you don't know this, Craig, but I interviewed Avi Gilbert from the ElliotWave.net, I believe is his website, met him at the PDAC, and he thinks there's one more low. A lot of my contemporaries think there's one more low. I don't. I think the low is in, but again, the market knows more than all of us. So unfortunately, these indecision patterns just wear you out. It's like, come on. It's almost not that I'm rooting for a new low. Believe me, I'm not, but I'm prepared for it. But it's like, you know, just do something. Just back and forth, just wears you out. That's where we're at, Greg. How much longer will it go? I actually think it'll go probably, June, July, August, perhaps. I would like to see it break through strong, day after tomorrow and keep going. But it's not going to do what I want. It's going to do what it's going to do.
Well, what do you make of J.P. Morgan holding all this physical silver? I'm sure you've seen the reports because you study the markets and all that. That's more than just a silver play. That's some other thing going on. What do you make of them holding these, 350 million ounces or whatever, or 400? I don't know exactly what the number is, but I know it's many millions of ounces of silver. What do you make of that?
Well, first of all, I know who you're referring to on the internet, and he and I don't agree on everything. I would certainly tip my hat to Ted Butler in a lot of ways. It's certainly, publicly I've done it before, but not very often. Ted taught me more details about the commitment of traders than anybody else I've known. He took his time, gave it to me freely. So, again, thank you, Ted. As far as what J.P. Morgan holds, first of all, Ted Butler and no one else except J.P. Morgan knows exactly how much they own. Now, I got a lot of questions on that. And, of course, for my members, I do these exclusive, Camtasia videos where I go in. So all we can absolutely prove in a court of law that J.P. Morgan holds is 55 million ounces. And that's in the public domain. So I did a video on that. Now, do they own more than that? Yes. Are they the custodian for the SLV? Yes, they are. But location doesn't prove ownership. So just because it's located in J.P. Morgan's custody doesn't prove that they're the owners. So if I was going to wag it, make a wild ass guess, I don't know if I can say that word on
That's okay. That's okay.
Probably, my guess would be 100 million ounces and no more than that.
What do they do with holding that, though? Should I hold it for other people, is what you're saying?
Well, the problem that the other side has, meaning what I consider the dark side, not the bright light side, silver itself, is that at these prices, there's always a physical market. And as long as they can supply that physical market, you're not going to get a big move up. You might get it for a few days until they can resupply. So they know, in my view, strongly what is going to happen in the future at some point. So in order to be able to manipulate the market further outside of the derivatives that they already do extensively, is when there is a cry for physical, they're going to have to meet that demand. So they really have two choices. I agree with some of what Ted said. I don't agree with the amount, but that's not the main point. The main point is when they start, the public and institutions and silver users all demand physical. Is there enough to meet that demand? And the answer is we don't know yet. I suspect not. But if you have 100 million ounces available to you, you certainly can quell it for a while. And then there's always what's called the over-the-counter markets, where there's deals done between base metal miners that mine 70% of the silver, and they're real tight with J.P. Morgan and other banks that are commercial/bullion banks. And they say, well, look, we'll do a forwards contract, which is an over-the-counter futures contract, basically. And they'll come in and say, look, just hold off. We'll swap this for that. In other words, they're pretty good at controlling what they can to get the silver where they need it to go, so that from the perspective of the retail investor or the normal investor, even a hedge funds manager that really doesn't understand the depth of this market, will say, well, look, it's okay. Everybody's getting what they need. There can't be a silver shortage. It can't be, look the other way. But that day is coming, in my view. And I used to always believe it would be in the silver market. I'm not so convinced anymore. I think it could be in the gold market. That's a given. And it may start in the gold market first. And it's just going to be one of those days, like I know Rob Kirby. I don't listen to all of Rob's interviews. Rob and I are pretty good friends. Don't agree on everything like anybody. But I think he makes a very valid point. That day is going to come, and it most likely will be China, where they don't get the physical and they get some kind of an excuse that says, well, hold on, 2-week delay, and they wait 2 weeks. Well, wait a minute, 2 more weeks, or whatever happens. And, of course, that probably won't be public information until after the fact. But the market will tell us, because there'll be a price surge and it won't slow down. Or there'll be some obfuscation in the public domain, mainstream press telling us, don't worry, there was a misunderstanding. China didn't want this many tons. They only want this many tons. And they'll try to paper it over. But the fact is, and I know people are tired of hearing it, but a fact is a fact, and that is that the paper paradigm does not equal physical reality. And that day is approaching.
You're saying that they can't, some people say, they'll just keep manipulating this forever. And you say?
It's never happened in all of monetary history, and it won't happen this time. And it's going to go down in the financial record books. That's what I'm saying.
Oh, going to go down in the financial record books that the price is going to spike up?
I'm sorry to cut you off. I get excited. Look, there's an infinite demand for money. I mean, there's a direct correlation between freedom and free markets and free money. And the market, in thousands of years, has always chosen gold and silver as the ultimate top-tier money. So when there's a panic in the currency market, and there is, we'll get to Greece later, the populace, everybody, the rich, the poor, the in-between, are all going to seek one thing, and that's my money. they're going to be really uptight. So they're going to seek the safest thing they can trust. And the most trustworthy money of thousands of years is gold. Secondly, silver. And you could argue silver more so. I won't do that today. The point is they're going to go for the precious metals. And so there's this escape from the untrusted bond market, derivatives markets, currencies of all flavors. Maybe the BRICS will be able to escape somewhat. I'm not certain yet. I've made up my mind there's not enough data in my view. But nonetheless, there's going to be a panic buy into the metals, and there's only so much to go around. And that's when a lot of these people that think that they own metal, that have a certificate from like a J.P. Morgan or these other major banks, and they say, hey, I want to cash in this piece of paper and pick up my silver. Get in line. We don't have it, or wait a few more months, or whatever the heck they say.
So you think there's going to be actually, this is going to be some small, move up. You think that when this happens, people are going to panic into gold and silver?
Well, I want to use the word could, not would. It could happen. I believe it will happen, but believing it doesn't make it true. However, the way things have gone from the 2008 financial crisis to now, they've only gotten worse. And the setup, I mean, this basically is, my thinking, it's my, heart and head talking, and I believe it. But looking at all I've read about monetary history, I mean, I told you last time I have a book called The Penniless Billionaires, is to see the Zimbabwe sign with the guy holding up that cardboard sign that says, very poor billionaire. I mean, these type of things happen. Now, I don't think we're going to have hyperinflation. We did it on a show already. What I do believe is there'll be a panic exit out of currencies, and that event will cause people to run for the most trusted money that exists, and that is gold and silver. I mean, another thing is this, we can't have currency anymore. Well, that's a double-edged sword, because if you can't have paper dollars or paper yen or whatever currency, then the people that can think, the ones outside the box, will say, well, if I can't hold physical pieces of paper, guess what I can hold physical? Gold and silver. And they can't get around that. So that actually, one side of the coin looks like, well, they have more control. The other side of the coin is they have less control, because people that can think will actually go to the money of all time, gold and silver. And so once that coin flips, so to speak, you're going to see a higher demand. You don't see it right now. Unfortunately, markets move by psychology, not by logic.
Well, of course, we just had all this banks pleading criminally guilty to rigging the forex market. That couldn't cause a panic out of currencies, if you know it's all rigged. What is going to cause the panic out of currencies into precious metals, gold and silver? What's going to cause, in your mind, what's going to cause that panic?
Well, the honest answer is I don't know. I can give you some speculations. One is some event in the bond market that people don't see, and that's most likely the U.S. bond market, but it could be the yen. I mean, I have a friend, Trace Kipna, who did an interview with the Mastermind series. I met him in Panama. He's a Chicago floor trader and bright guy, and he's got a website called Short Japanese Debt, and he's just going to trigger in Japan. And I never rule out, any of this stuff. I look at it all, or try to. And he makes a very good point that, Japan is so illiquid, and they've gone to basically the hyperinflation route, that it's only a question of time. And he thinks that's where it'll start. And it could. It could start anywhere. There's just a bunch of killing all over the bond markets, all over the debt markets, all over the world. And there's just, one match could light it off. So I don't know exactly, Greg, where it will be. Excuse me off a little bit. But I do know that history teaches us that once the confidence is lost, you can't get it back. And that's what this game's all about. I mean, the bankers are, in a metaphorically way, puffing out their chests, sticking out their chins, and saying, we got it under control, we got it, got to see the recovery, as they're marching down the road with no clothes. And more are starting to see it. But, when 2 or 3 people exit the theater when it's on fire, and they do it quietly, no one really notices. That's the smart money. But then 5 or 6 go, and then all of a sudden 8 go, and 2 shoulders bump together, and they're kind of stuck in the doorway for a minute, and then they start yelling at each other. Now the whole crowd looks around and sees that, and they say, I wonder why the heck they're leaving. And then all of a sudden it's a crowd mentality that takes over. That's the conditions that will happen. What the trigger point is, Greg, I really don't know, but I believe strongly, again, that it will take place.
You still liking this fall? Because at the beginning of the year, you and several other people have said that this fall is looking really tenuous, that there's a lot of things coming together in the perfect storm of market calamity. Are you still liking this fall, and why? For a market calamity, market crash.
Well, I am. I'm not a big cycles guy. I mean, I believe there are cycles, but it's not my main work. There's a guy, Eric Haddock, that's been kind enough to swap newsletters with me for years. In my view, he's probably the best on cycles. So part of it is based on his work. Part of it is the 7-year cycle in the stock market, and then the idea that seasonalities play very strongly in both the metals and in the stock market. In September, October, which is the time frame where you're going to get a fall off. The market's so overvalued, it has no relationship with physical reality. The physical economy does not match what the stock prices are at all, not even close.
Well, this just had a big miss on the manufacturing numbers. I mean, big miss on the first quarter. It was down 0.7% for the quarter. That's the best they can make it look. Now manufacturing numbers are coming in. They're plunging. I mean, looking like we're in any kind of a recovery. I mean, it's right. I mean, this is just looking like it's spiraling down, not raising up. What do you say?
No, that's true. And that's the problem, is that no matter how much you put out the mainstream media says things are good, all people have to do is kind of look out their window. So that fact starts to get into them, meaning that they start to ponder, why the heck is it going this way? And again, there's a trigger mechanism that most people have, what I call financial survival instinct. And this Greece thing could be it. I mean, we've thought that in the past. I actually thought there might be a Greek exit here sooner than later, but they've kicked the can down the road. Maybe they're going to be able to do it for another few months. I'm not certain. A few people probably are well aware of what's going to happen next. But nonetheless, you cannot stop reality. And the reality is we're in a debt-based economic system on a global scenario that's never been done before. Look at my early work in the early 2000s. I talked about it. It's not a U.S. dollar phenomenon. It's a global phenomenon. And when this thing busts this time, it's going to make the 1930s look like a warm-up parade, because it won't be just centric to Europe and the United States. It'll be China. It'll be India. It will be Australia. It will be Europe. It will be the United States and Canada. It will be Mexico and South America. It's going to be everybody. And everybody's going to be affected. And, I don't know if we have cooler heads this time or not that will be able to come to the table and negotiate with honesty. See, the trust is the main thing. It's all about confidence and trust. And now these banks don't trust each other, and that was the breakdown in 2008. No one wanted to accept each other's paper because they didn't trust it. So the Fed had to step in and say, well, you trust our paper, it's government-backed. Take this for your crappy paper. And that's what's been going on for years now, is that the Fed's balance sheet has increased by taking this crap that isn't worth anything and giving back Treasury bills and Treasury notes and Treasury bonds, that great American stalwart, the safest thing you can invest in, the bond market. But remember, whenever you have a lot of something, it has little value. If there's a bazillion paper clips on the street, do you think you could sell it in a store? No. It's the same thing with money. Money is a commodity like potatoes, and the more of it you have, the less value it has. And at some point, people wake up and say, I don't want this stuff. It's worthless. And that's the problem with the fiat money system. They always collapse.
So what do you say to the people that say that, actually there's going to be so much debt destruction that the dollar's going to go up in value, and there's going to be very little dollars, and all these bonds and all these dollars are going to be destroyed in a big deflationary spiral? What do you say to them?
I never rule it out. Credit and debt doesn't equal money. And so if you want to get really technical about it, and I want to make it simple, I want to understand it. A lot of that debt could blow away, and so then you get what you're outlining, and that is, well, how many physical dollars do you have? Let's just think of it as what you have in your checking account, or what's called near cash, or what we call the true money supply in the Morgan Report. We'll go into this in depth in the Morgan Report. But the true money supply is basically the currency supply. It's not the debt supply. And the currency supply, compared to the debt, there's a vast chasm between the two. So it's something like 25 cents on the dollar. I forget the exact number of my own report. But the point is that you could have a crash where all debt can't be paid, and then everyone's going to have to take a huge haircut, and then cash itself becomes more valuable. That's not something you can rule out entirely. The problem is, as the bond market panics, there'll be that big money will be seeking safety. And remember that the bond itself is just future dollar payment. So people are going to say, well, I'm not sure I can trust the dollar. So they're going to say, well, what can I trust? So if you were going to hedge, you say, well, maybe the dollar itself will hold, but I'm not so sure. So even right now there's about 1% of the total global money supply that's even in gold, and that's that's paper gold. So if it moved to 2% or 3%, or let's say even 5 or 10%, I mean, that amount of cash, even in a deflation or a bond blow up, still is a lot of money that tries to fit through that doorway I described earlier. So I think you will have where cash will be king. It could be currencies. I don't rule that out, but the ultimate cash is what's lasted, again, thousands of years. See, as Mike Maloney and others have said, a fiat system, once you cut it from gold or from gold silver, usually goes about 40 years. And so August 15th, 1971, when Nixon cut the international gold standard for settlement nation state to nation state, you add 40 to that and you get 2011. So is it a 40-year exact? No, it's not. None of these markets move exactly. That's why I'm not a big, huge cycle guy, because, there's variances. But nonetheless, the idea is sound. And so we're at the limit pretty close right now. Can it go another 10 years? I truly doubt it. Could it go another 4? Probably. I think, again, that this ball is going to start to fall. And so there'll be all kinds of situations that will unfold that none of us probably have thought about. I mean, look at Armstrong. He's one sharp guy out there. But even himself, myself, I don't want to, say anything about others that, isn't accurate. All I'm suggesting for everyone to consider is that no matter who your guru is or who the thought person is or how much study they've done or how much the history repeats, it rhymes, but it doesn't repeat exactly. So because we have electronic money and we have such a control mechanism with the NSA and the banks have such a control mechanism that the only way to escape is in the physical metal. And that is something that they absolutely hate, because they might be able to track all your cash transactions or outlaw cash. So if they hyperinflate, you can't go get your currency out of the market, or they're going to bail in, and you say, well, I'm not going to let them bail in. I'm going to go down to the bank. I'm going to get everything in paper dollars and stick it to my mattress. Oh, no, you can't have cash. So it's one more way to control the populace is what it's all about. But they can't control convertibility of cash or credit into physical metal right now. And that's why, again, that other side of the coin. So what I said earlier still holds, that there could be a day when there's more and more people waking up and someone says, well, I had pick a number X thousand in the bank and I was really worried about a bail-in. And of course, I'd actually like to go to the bank and get US dollars, but I can't get cash anymore. Well, what'd you do? Well, I went down to my coin dealer and I bought this many gold coins and this many silver coins. That's what I did. So it is the only way to escape at the current time. I mean, there are others, but that's really the most basic, easiest, and best way.
So you don't need everybody to panic into cash. Just 2, 3, 4, 5% of some real money to panic into cash, and all of a sudden you have a price vaulting up. Is that right? Is that right?
Absolutely. That's right. Going back to the fire in the theater analogy, once that thing starts and the panic starts, and those two guys jam the escape, the door, then there's a big fight and the fire keeps going. And, who gets out and who doesn't? Well, not everyone necessarily gets out. There's no way that everyone can get out. I mean, if you look at in theory what the theoretical price of silver are based on what just the true money supply is, you're looking at something like $10,000 gold. So that's getting rid of all credit. That's getting rid of all the credit. Say, no, all the credit that's out there goes no good. It's no good, unpayable. And now what you're looking at now is what we call the true money supply, which you can basically think of if they printed all the dollars that are absolute in the bank. In other words, there are savings accounts and checking accounts. That's what's basically the true money supply. I'm trying to keep this simple. That's it. That's very accurate. So all of that is printed into physical dollars, okay? And then you take that divided by the amount of gold the Treasury says we have, which I question. And you come out with roughly $10,000 an ounce gold, and that's without any credit being available. So, people want to think this thing through. Again, I want to come back to the point. I don't want to sound, two-faced or anything. One, no one knows exactly. I've never ruled out a deflationary depression, but I don't see it. I see, and of course, being an Austrian, my peers will hate me for saying that you could see them both at the same time because an Austrian isn't supposed to say that. But I think you could see what we're seeing now. Really, stagflation kind of covers me by using that word. You'll see some areas that are very robust and other areas that are stagnating or going down significantly. And so, looking out your window, you can see electronics goods costing less and less because the efficiencies are better and better, and food going up and up and up. That's a reality that we see right now. So, in theory, you can't have them both, but in reality, I'd say, yeah, you can have at least the idea that they both exist because, there are asset classes that will actually be valuable and ones that won't, and the market will determine those.
So what do you make of Texas? Are they
Eventually
panicking into gold and silver? Are they panicking into gold anyway? They're going to vault their gold. They're going to get their gold, $1 billion, and have a vault in the state of Texas. What do you make of that?
You got to take your hat to Texas in a way. I mean, they basically understand states' rights as well as probably any state in the union. But I want to digress a moment, Greg, and talk about Utah. Because Utah passed a bill in the state that said that you can transact with gold or silver in any transactions as long as both parties agree. And I was invited to speak there twice. I was also invited to see the government sign it into law. And it really was quite an event. And this was not that long ago, but a few years back. Unfortunately, in my view, it wasn't implemented and it really made it easy. And I gave a speech about that taking place, and one of the guys here in my local area started a gold and silver, or actually any precious metals, platinum, palladium included, debit card. That was the way I envisioned it, which is where you just basically put metal in a depository, you're issued a debit card. Now it's transparent to the merchants. So if you go into Walmart and you use a precious metals debit card, as long as it goes through the banking system, they don't care. They don't know that you're actually debiting out a certain amount of silver to make that transaction valid on your end. They just see that they got paid in fiat. So this was implemented by my friend. If you're interested, you can write to us at support@silver-investor.com, and we'll get back to you and put you in touch with the people that run this silver and gold-backed debit card. But Texas, I'm moving on, I just want to get some background. So Texas is now another state to do this. And first of all, getting their gold into their state, I think, is a very smart thing. It puts more pressure on the physical market. I mean, people say, well, I've got, I don't have any derivatives. I don't have a certificate saying gold and all this. That's not what I'm talking about. Sure, there's some probably big investors that do, but that's not it. The derivatives market is like the Texas, state of Texas, pension funds, huge hedge funds, wealth funds, these type of things. And these guys don't really have necessarily the place to store millions and millions or $500 million or $1 billion of dollars worth of gold or silver or whatever they've got, so they trust their counterparty with a certificate that says, oh, it's vaulted here, and here's your, even to the length of bar numbers, although some of them don't give them. That's highly suspicious. And so now, if things start tumbling down, as we've outlined 3 or 4 times on this interview, and they say, I'm not so sure that I trust this piece of paper with HSBC or whoever, I think I better get it. It's going to cost you, you're going to have to ship it, you're going to have to get transportation, you're going to have to use Brinks or, Garda or one of these, four-wheel trucks that carry this stuff all over the place. I said, that's fine. No problem. Here's your fee. I want the gold. Well, that's, again, going back for the third time, going out the theater exit. And you know what? Hey, it's not all there. I'm convinced of that. I mean, the ratio between the amount of paper gold, silver, and paper silver relative to the physical is so out of proportion to what really exists. It's an absolute given that it can't all be there. And no one knows who's going to be left holding the old maid. So that circles all the way back to the currency thing. Do you want currency or do you want gold? Well, I'd suggest, if you don't know, have them both. If you're really conservative, have half in currency, half in gold, and that way, no matter which way it goes, you're protected. I favor gold. There's never been a fiat system that has gone the way where the paper money is more valuable. It's only gone that way when gold has been the backing. So the 30s was a gold-backed currency, even though they confiscated it. But that's what the basis was. It confiscated the gold because that was the money. So in a precious metals-backed system, you can have a debt-liquidating depression. In a non-gold-backed system, the path of least resistance has always been to keep inflating so that the currency is worth less, and then worthless. I think it'll be similar to that. I don't think the dollar's going to absolute zero, but I think before this whole thing reset or unwinds, there will be a reset. $10 old to throw on a new one, or there'll be a new currency or a regional currency, or don't take out cash, don't worry. And, again, I want to emphasize this, Greg, and thanks for letting me go a little longer. Look at the Argentina situation, or look at, Cyprus, or look at current history. The more you look at their term, the better objectivity you have to think through what was the most likely case to the near future. So let me explain. What took place in those situations was they didn't take your money. All they did was say, we're holding your money for you, and you can only get this much out per week. So if you had 10,000 in your account, or 100,000, or 10 million, it didn't matter. You're only allowed to extract whatever it was. I'm making up a number. The point is clear, 2,000 pesos a week. That's it. So it didn't matter if that didn't make your house payment or feed your kids or any of that stuff. That's the rule. So it's like, oh, don't worry, your money's safe. We're holding on to it. But here's the deal. You can only extract this much of your money. Well, it's not your money. If you look at the little signature card, that's what they call it. That's a contract that you sign with the bank. And basically, you are actually supporting the bank. And if there's a bank-run bank failure, whatever, they're going to come to you. And they're going to bail in, which means they're going to use whatever means necessary legally to take your money to support the system, to support the banking system. It's really a mess, Greg. I mean, we're in a situation that you have interviewed time and time again other thinkers, such as myself, and we've reviewed this time and time again, and people think it's doom porn and that it's not, it's entertainment, and, the reality is it's not. The reality is that we're getting closer to this day, and how it unravels, and I'm not sure. The market knows. What I do know is think it through, educate yourself, and take action. You want to take action. You don't need to, put everything into gold and silver. I've never advocated that. You need to have a position that makes you comfortable. And then absolute total 100% collapse, and that will not happen. People are too imaginative, and they have too much of a survival instinct for that to take place. But even in that case, 10% holdings would probably go up 10-fold or 20-fold or 30-fold, so you actually wouldn't lose anything just by allocating a 10% to the precious metals. And again, that could not only save you financially, but certainly give you peace of mind to go on your daily business and maybe, consider me and others like me to be a crackpot. 10% is not a huge part of a portfolio to have peace of mind and say, you know what, I don't think he's right, but I think it's possible. So because it's a possibility, I'm going to, I'm going to insist that we have this precious metals holding. And again, go about your life. I mean, go out there and save the world, because it certainly needs to be at this point.
The interesting point you made about Texas with the vault, a matter of trust. Really, it's the vault is showing that the confidence is breaking. Is that right?
Absolutely. I mean, that's the way it happens. Again, like all things, starts slowly. The leader takes off from the pack and starts going a different direction, and then no one's following that leader. But then the one or two animals say, and they look over there and say, you know what, I don't really think there's food that direction. I think we've got a better chance going that way. So then that leader starts to get a few followers. And then all of a sudden, most of the herd says, you know what, I think that's the way to go. So it's just a change of consciousness. It's the idea that, you know what, I've trusted this bank my whole life. I've trusted this brokerage house my whole life. It's such a huge paradigm shift to get away from that trust mechanism that hasn't failed them yet, to move on before it does fail. I mean, once the ship has sunk, everyone knows how it might have been saved, but that is too late. You see, you got to make the action before it happens. You have to anticipate that I'm not a kook, I'm not a crackpot, I'm not a nut, and that these things are going to happen. And you want to be in that lifeboat before. You don't want to think about it, well, if this happens, then I will. If gold makes a $50 move in one day, then I'll jump on board. It might be too late.
The Texas Vault is a huge hedge against debt in paper currency. That's what you're saying.
Absolutely.
David Morgan, themorganreport.com. David Morgan, thank you for joining us today on USAWatchdog.com.
My pleasure, Greg. Thank you.